Make sure to get your free money from Moomoo. If you haven't done so already, use that link down below, deposit at least $100, and just like that, you get up to 5 free shares of stock, each up to $3,500. And with that being said, let's dive into the video. So check it out, guys. The markets did pretty well today, considering recently the markets have been a freaking bloodbath. Today we had the NASDAQ up 1.3%. The Russell pretty much broke even. The S&P 500 went up 0.25%, and we had the Dow Jones down about 0.25% as the VIX went down 5%, and we had gold. Let's see here. Gold went down 1.1%. Silver, geez, guys, silver continues to get slaughtered. It went down 2.7% on the day. And you guys can see today overall, if I pull up the intraday chart on SPY, today was ridiculously volatile, guys. Look at this. We ended up running in the pre-market. If you guys remember, SPY was at 400. It ran up to about 406. The market opened. Then we had some lower highs made. You guys can see here we hit 406. Then we hit 404.80. And then we dumped all the way down to 394. So intraday, SPY went from 406 to 394. That's a spread of 2.75%. And then we ended up running from 394 up to about 403, which you guys can see is a 2% move, and then we ended up dumping from 403 to 398 into the close, which was a 1% move. So we had many moves throughout the day, which ranged from 1.5% all the way up to almost 3% here for SPY. When it comes to triple Q, let's pull this up. You guys can see we opened up at 305, dumped to 300, back to 305, down to 296, back to 305, and then we went down to $300 at the close. So you guys can see how volatile this is. I mean, and this kind of looks like an inverse head and shoulders on the intraday chart, which played out nicely on triple Q today. You guys can see that, right? Left shoulder, head, right shoulder. That's a very sloppy looking inverse head and shoulders, but you guys know what I mean, right? So tomorrow morning, the reason why things were very volatile today is because tomorrow morning we get the April CPI data, and analysts expect the consumer price index, which is the CPI, to show a sharp pullback in monthly growth, cooling to a 0.2% print in April from a 1.2% print in March, which, if you guys remember, that jump in March was the biggest monthly jump in more than 16 years, and an actual increase of 8.1%. That's going to be annualized. Let's say if we do get that April number coming in at 0.2%, it's going to be 8.1% annualized, which is 0.4% lower than the 8.5% number, which was the March number annualized, right? Which was the hottest reading since December of 1981, which is over 40 years ago, guys, which is just crazy, right? So it's very clear at this point that the markets are waiting for for this number. It's very volatile. People are still uncertain about it a little bit, but I guess a really good thing is the fact that it's pulling back in a major way in terms of, that big spike in March. We're going to be coming down a good chunk here in April, but still annualized. I mean, that 8.1% number is very high. So at this point in time, the major question is, the golden question is, has the stock market bottomed? And the truth is, guys, you know me, I can't tell you if the stock market is bottomed. Nobody does. But I have a feeling if we do get this number tomorrow, okay, maybe it's 0.2%, whatever it ends up being, we might end up getting some sort of rally. I've been saying this ad nauseum the past couple of days. I'm not going to go deeper into it in this video, but I'm still sticking to that, considering April, the April we just had was one of the worst months ever in the markets. I don't know if it's the worst month ever, but it was freaking horrible, guys. An awful month. And, now we got the Fed meeting. Okay, we kind of know where the Fed's at. And now we're getting, the CPI data. So what's next? After this, we kind of have a couple of weeks for the markets to do their thing. And I feel like we could be making a move. If this channel plays out, triple Q, if it starts bottoming at 295, 290, 300, which as of now it has been for the past, day and a half, which is not much, to be honest, guys. But if we consolidate here for a couple of days maybe and then start moving up, I think triple Q could get some full head of steam, maybe to about 330, 340. That's where it could be going. Now, will it for sure go to that point? I don't know. Obviously, nobody knows what's going to happen. But I'm going to set my alerts and kind of see where we're going to go. I'll put one at 305. So I'll do that. Mark is at or above, and then I'll put one maybe at $310 as well. Create alert, mark is at or above $310. And when it comes to SPY, let's see some of these levels. Right now we're at the bottom of the channel at about 395, 400. I have an alert at 415, 430. I'm going to put another one at 405. Create alert, mark is at or above $405 a share. Let's do that. Boom. And we'll see what happens, guys. If we start making that move to the upside, I'm telling you, we're overdue for it. We might have a little bit of an extended rally. Let's see. What do you guys think about that? Let me know in the comments. Make sure to smash that like button if you haven't done so already. And don't forget to subscribe if you haven't done that either. And with that being said, let's talk about some stocks. We had some companies report earnings today. 5, I think, here. Maybe 6. Is it 5? It's 5, guys, that I want to talk about. Then we'll run through my watch list and see kind of some other stocks afterwards. So number 1 is Coinbase, which, guys, did I not say this in my previous video? Coinbase today went down 12.6%, actually, 12.6% on the day. And now after the bell, it's at 63, and mind you, it closed at 73. So it's down another 13%. So Coinbase today alone, from this morning at open, or yesterday's close, it is down 25% right now, which is just freaking crazy, right? 25%. Yesterday it closed at 83. Now it's under $63 a share. So Coinbase did EPS of negative $1.98, which is down from the $3.05 profit a year ago. So that's a big swing right there. Revenue came in at $1.16 billion versus $1.47 billion estimated. So this is not really a surprise. I mean, we kind of talked about this in my previous video. We expected Coinbase's numbers not to be that good. But when it comes to the Q1 monthly transacting users, that number's pretty good compared to last year. 9.2 million monthly transacting users versus the 6.1 million in the same quarter last year. I guess that's a pretty nice pump there, or a bump rather, 50% pop, year over year. And trading volume is not much lower than where it was a year ago, although it is lower. It came in at $309 billion versus $335 billion year over year. So these numbers are not atrocious. I mean, yes, the EPS and the revenue number for the previous quarter is pretty bad. Okay, I guess that's pretty bad. And obviously the growth is slowing down in a major way. And we kind of assume this, right? But who knows? Coinbase might make it through the storm. We never know what's going to happen, guys, with these speculative, kind of very extremely volatile companies. So, and we mentioned in my previous video, I just realized, if they did, oh my God, the average revenue estimate on Yahoo Finance was $1.48 billion for the quarter, and that would have been down 18% year over year. So the fact that they came in at $1.16 billion, that is down way more than 18% year over year. We're talking 40% year over year decline in revenue for Coinbase. That is not really good at all, and the stock is getting destroyed for it. Now, if we get into that environment where we do get a nasty rip in the rest of May here, maybe we get that extended relief rally, Coinbase and all the risk-on stocks are going to come back in a major way. They're not going to go back to all-time highs, guys, because Coinbase, you have to realize, for this to go back to all-time highs, it has to go up now 5x, right? It's got to go up 8x or whatever to get back to where it was, which is why investing in stocks like these is dangerous, because let's say you bought this at $300, right? You may be down 75-80%, and you may be thinking to yourself, oh, it just has to go up 75-80% for me to recover my losses, right? Wrong, guys. Very wrong. For you to recover your losses, it's going to have to go from $60 back to $300, which is a 5x. That's a 450% return. It's pretty crazy. So keep that in mind when you're investing in companies like Coinbase. But again, remember, if we get in that risk-on environment, this could easily rip, not to all-time highs, but it could go to $100 again, 80, 90, 100, 100 plus. no doubt in my mind. So keep your eyes on Coinbase. Wynn Resort is another one. Wynn Resorts, rather. Is it a there's an S at the end of that, right, guys? There we go. Yeah, Wynn Resorts. This one up 0.5% on the day, closed at $61.65, and they did miss on. They missed on both EPS and revenue, guys. Adjusted EPS came in at negative $1.21 estimated versus the negative $1.15 estimated. We had revenue come in at $953.3 million versus $986.36 million estimated. So double miss for Wynn Resorts, and I guess the stock's been bludgeoned so much to the point where investors were expecting this. You know, the stock's already down 42% in the past couple of months from 107 now to 61, and it went down in the past month alone about 30%. So the fact that it's down so much, they slightly missed on earnings. It's like, whatever. You know, the stock's being down so much. How much lower could it go? So at this point, Wynn is chilling at about $60 a share. We'll see if we do get some sort of snapback. Maybe it comes anywhere from 65 to 67 a share. If that were to happen, that would put it right by the support from the middle of March, right around 66. And maybe if it got to the moving averages, you know, 68, 69 is where it could end up going. So Wynn Resort, let's see what this does now that they reported earnings, and we got that CPI data coming out tomorrow. So that is ticker symbol WYNN. Another one that I want to talk about is Occidental Petroleum, OXY. They did EPS of $2.12 versus $2.03, estimated with revenue of $4.7 billion. So they beat on EPS. Revenue, I'm not seeing an estimate here, so I don't know if they did beat on revenue. Let's see here. Actually, no. That's not the revenue number. That is the profit. $4.7 billion is the profit. What the heck's the revenue? I'm not seeing it on here. Revenue. But I'm assuming they made a decent amount more than about $4.7 billion. You know, obviously. So what's the top line? I'm not seeing it. But overall, this stock is one that I'm looking at about $60 a share. I think there's a breakout coming at about 60 to 61, hence why my alert is at $60.50. If that point breaks, I'm telling you guys, this, in my opinion, is going to fill the gap back to $65, which has been resistance time and time again since the early days of March. And from there, 65, if that point breaks, we're talking about a multi-year high. The last time Oxy has been above 65, guys, no joke, I think it was back in 2018, 2018 was the last time. And look, 65 breaks, the next gap is 72, followed by 78. So there could be a lot more upside, especially if this inflation in oil continues and the oil market stays hot, which at this point, it really has there's no sign of it cooling off. I mean, all these gas stations in my area, the prices are going up. Crude oil is still above 100 a barrel. This does not seem like it's cooling down. And if we're actually in a recession, right, which I think we are, we only had one negative reading of GDP, but the next quarter, if that's negative as well, technically that's a recession. What does well in a recession? Energy, oil. So, it's going to continue going up at that point. And, Oxy, again, 65, 70, 75 is where it could be going. So keep your eyes on it. OXY Matterport is another speculative stock that reported earnings. And oh my gosh, the stock is $4 now. Holy crap. I haven't looked at this one in a couple of months. I'll be honest, guys. But it was 37. Last time I checked, it was 15. Then that goes to show it's been a couple of months. Because when it was 15, it was early January. Now it just hit under $4 today. So what is that? A drop of about 88% from that 37 high. And I think the all-time high was even higher than that. Let's see here. Maybe not. I guess 37. Yeah, 37 is the all-time high for Matterport. So they ended up doing adjusted EPS of negative 10 cents versus negative 14 cents. Estimated revenue came in at $28.5 million versus $27.47 million estimated. So they beat EPS and they beat on revenue. And when it comes to their guidance, guys, they see adjusted EPS of -15 and -13 cents versus -12 cents estimated, with revenue being around 28.5 to 30.5 million versus 31 million estimated. So it seems like the estimates for the next quarter are not up to par when it comes to the analyst expectations, right? So that's not good. But the funny thing is, the stock's up. We closed at 426. The stock ended up running to 480. Now it's at about $4.40. So it's up a little bit, about 14 cents after the bell. So that's about what, 2-3% for Matterport here. So this is one that, quite honestly, guys, I'm not looking at it to buy it. I'm just watching it kind of for fun. I'm keeping up with the company, looking at these earnings reports, and we'll see what happens to it. Out of all these stocks, I'll be honest, I don't own any of them. And the only one that I would consider owning at this point is Occidental Petroleum, especially if it starts breaking, like I said, 60 to 65. I think there could be a lot more upside from there. So what do you guys think? Keep in mind, Matterport's pretty risky. Coinbase is pretty risky. Wynn is also risky. There's a lot of Chinese exposure there. Occidental Petroleum, it has its risks as well. Let's say we're not in a recession and somehow, some way, oil prices start coming down. That stock's going to get obliterated. I mean, these are all risky in their own way. There's risk everywhere. Don't let anybody tell you otherwise, right, guys? And I'm just keeping it real, right? And the next stock, the last of the 5 here, is Rocket Mortgage, which you guys can probably imagine this company is not doing well. This stock is down, or went down 7% on the day, closed at $7.81, and now after the bell, it's at $7.40. It is down 5% after the bell. So overall, it's down 12% from yesterday's close. And you guys probably can realize or understand why Rocket Mortgage, or Rocket Companies. I thought they were called Rocket Mortgage. Either way, I guess Rocket Companies now, whatever. They do mortgages, right? And in terms of last year's numbers compared to now, this company is not looking good. They did adjusted EPS of 15 cents, down from 91 cents year over year. So that's a big decline. And adjusted revenue was $1.93 billion for this quarter versus $4.04 billion a year ago. And I'm not a real estate expert by any stretch of the imagination, guys, but I do know money has gotten, or let's just say, money is not as cheap as it once was. I think mortgage rates now are like 5.5%. They might be pushing 6% is what I'm hearing, right? Which is a lot higher than what people were getting, a year and a half, 2 years ago, 1.7, or not 1.7, 2.7, 7.5, 3, some lower than others. But all you guys got to realize is the mortgage rate now is a lot higher, right? And, just real estate in general, the market has cooled off a bit. So we can see that big decline year over year. And the stock, like I said, is down a decent amount. And let's see here. Closed organization, or a closed loan origination. If I could read today, guys. Closed loan origination volume, $53.97 billion versus $100 billion in the same quarter last year, which is nuts. Net rate lock volume, $49.6 billion versus $95 billion a year ago. So they're down year over year on pretty much every metric, guys, and it shows in the stock price. And I don't think that's turning around. If anything, mortgages are going to get worse, or more expensive before they get cheaper. The housing market might get worse before it gets better. I mean, we don't know, right? We don't know. We're in very uncertain times at this point in time. So what do you guys think about those stocks? Do you own any of them? Are you looking to buy them? Let me know down below in the comments. And let's run through quickly my watch list and kind of see what ended up doing well today, what other stocks went down today. So today we had CrowdStrike go up 5.7%. NVIDIA had a nice bounce back day, 3.8%. DraftKings up 3.4%, which DraftKings, guys, holy crap, it's $11 a share now. This might go under 10. In fact, it probably will go under 10. I mean, it went down to 10.38 yesterday, so that's That's almost under $10 a share, guys. But today in general had a good day, up 3.4%. We had Netflix up 2.6%, Intel up 2.2%, Google, my biggest position, up 1.3%, which can't complain there. Apple up 1.6%. And when it comes to the red stocks, AMC and GameStop, both of those went down 5.5% roughly. Tattooed Chef down 4%, Upwork down 3%, Beyond Meat 2.5%, Palantir down another 2.3%, Starbucks down 2%, Snapchat down 2%, Las Vegas Sands down 2%, Nike down 1.5%. So it was a mixed bag out there. Some stocks green, some stocks red, a lot of red out there, even though the NASDAQ and the S&P closed green today. So what do you guys think? I'll wrap it up there. If you all enjoyed the video, hit the like button, subscribe, let me know your thoughts in the comments, and join my Patreon if you want all my buy, sells, call outs, all that good stuff is linked down below. And make sure to get your free money from Moomoo, up to 5 free shares of stock, each up to $3,500. Just use my link down below, deposit at least $100, and boom, you get your money from Moomoo. And you also have a chance, you have a chance at a free share of Twitter. And if you guys don't like the platform, take out your $100 and you keep your free money just like that. It's free money. I'll catch you all in the next video. Peace out.